Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 401 on November the 15th, 2025. I'm your host, Eric. And in this week's show, we'll cover the trades from last week on EOS Energy Enterprises, Bitfarms, American Airlines, and Quantumscape Corporation. And we discuss three new trades on Opendoor Technologies, Anavex Life Sciences Corporation, Rocket Companies, and Freeport-McMoran. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them or visit the YouTube channel for the Weekly Option. Now, the market finished the week relatively unchanged, although there are definitely some big daily swings. The Dow Jones Industrial Average picked up 160 points, closing at 47,147 points on Friday. The S&P 500 index gained 5 points, ending the week at 6,734 points. And now it's time for the topic of the week. The topic of the week is perfect practice. And when I was growing up, I can't tell you the number of times I heard that practice makes perfect. Then came the acknowledgement that practicing something wrong over and over again doesn't mean you're going to get it perfect. You'll just be creating muscle memory for doing it wrong over and over again. When I heard Tony Robbins say, perfect practice makes perfect, I understood that even deeper. It's not just repetition that makes you better. I'm a musician. I love playing music. We always said that you perform the way you practice. Most of the time, that was true. You didn't somehow have an enlightened performance after hours of bad practice. And as a percussionist, if you wanted to play something fast, you started off by playing it slowly, the right way. I'd slow it down and make sure that every measure of music was right. Sometimes I would play the same measure over and over and over again until I got it right. There's a way that I've been able to do that with trading as well. I use TradingView as my charting software. There's a built-in setting to replay the price chart for a previous period, tick by tick. This lets me retrade the day, analyzing my indicators and setups. It's different than backtesting. The problem with backtesting is that it assumes perfect execution. My emotions can sometimes get in the way of perfect execution. Retrading the day helps me practice perfect execution so that I can be better when the market opens back up the next day. I will retrade the entire week this weekend, tick by tick. By the time Monday comes, I'll be ready for another day of trading. It's all about getting a little better day by day. Do you have a practice routine for perfect practice? If not, send me an email and I can help you create one. So that's it for the topic of the week. Now, the market was rough on all of last week's trade, so just consider that a forewarning of what's to come. We're going to start off with our covered call on EOS Energy Enterprises, symbol E as in Echo, O as in Oscar, S as in Sierra, E as in Echo. At the time, the stock was trading for $18.26. I looked at buying stock and selling the November 18 half call at $1.73, hoping for a return of 10.79% in 2 weeks. Well, shares of EOS Energy fell $4.47, ending the week at $13.79 per share. The call option we sold lost $1.59, leaving us with a net loss on the week of $2.88 per share. We will definitely need to make an adjustment, but I want to be very careful with 1 week left until expiration. I would like to roll the strike lower to collect more premium for the week. That will offset some of the loss for now. And then I can sell a call option in December, so after expiration, that will get us closer to recouping our full loss on the week. Now, I'll look to sell an out-of-the-money call option in November, but I want to make sure I keep the stock beyond expiration because I can't capture enough premium in November to offset my loss. So I want to make sure I hold on to that stock so that I could sell an additional call option next week. Now, I'll look to sell the November 15 call at 45 cents, which will lower my loss to $2.43 on the trade. Assuming stock does not rally above $15, I will follow that up by selling an out-of-the-money call option in December to take in more money on the trade and offset my loss. I just need to make sure that the price of the option plus the difference between the strike price and the current stock price adds up to at least $2.43. It always comes down to doing the math, and this is a perfect example of that. The danger in the covered call strategy is always having the stock drop significantly, which is what happened last week. Nonetheless, we still have several ways to keep making money on this trade. You could even pay 17 cents for a call ratio spread to protect against a significant stock rally that takes you out of your stock. That's a little beyond the level of complexity for this show, but if you reach out to me, I can explain it to you. Next up, we have the cash secured put from last week on Bitfarms, symbol B as in Bravo, I as in India, T as in Tango, F as in Foxtrot. At the time, the stock was trading for $3.67 per share. I looked at selling the November 3/2 put at 33 cents, hoping for a return of 9.43% in 2 weeks. Well, shares of Bitfarms lost $1.10, ending the week at $2.57 per share. The put option that we sold gained 69 cents and is now in the money. We will expect to be assigned on this position, which will have us buying stock for $3.50 per share. To understand the full profit and loss, we first have to consider the stock. We will end up buying stock for $3.50 per share. The price is currently $2.57. That is 93 cents less than what we would pay. We collected 33 cents to sell the put, which means we keep that money. So that means we would be buying stock for an effective price of $3.17 per share, leaving us with a possible loss of 60 cents on the week. If that were all to happen, we would wait for expiration, and then our next trade is to sell a call option against the stock in December and create a covered call. And that way, the short put leads to a natural covered call position if we ever end up owning the stock. For now, there aren't many adjustments to be made unless you have been assigned the stock. If I am still short the put and haven't been assigned the stock, then the trade is not over. We are 1 week away from expiration, and a rally in the stock could lead to walking away from this trade without the need to manage the position at all. Since this was our first short put on the show, I wanted to give a longer explanation just so you understand. Let me know if you have any questions, but just remember, on these short positions, until you get assigned the stock, you really don't have any decisions to make on a short put, because there are times that people don't end up exercising. But if you do get assigned the stock, that's when you have to now make the decision of how you're going to manage the stock position for a profit. I always like to manage these for a profit. If you own the stock, you have more time. Options have time, a time cap, but the moment you own the stock, you actually have a longer amount of time to go ahead and make money on the trade. So let me know if you have any questions. That's perfectly fine. Just shoot me an email. Next, we have our credit spread from last week on American Airlines, symbol A as in Alpha, A as in Alpha, L as in Lima. At the time, the stock was trading for $13.66 per share. I looked at selling the November 13 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Well, shares of American Airlines fell 90 cents, ending the week at $12.76 per share. The out-of-the-money put spread we sold is now in the money, which means it is losing money. We started off with a maximum possible loss of 34 cents per spread. If we were to close the trade out right now, or really on Monday, I would lock in a loss of 26 cents. So this spread has definitely moved against us. If you sold the at-the-money call spread, it would have the same exact strikes as the put spread. That means you would create a short box, not an iron condor. The box spread is a little more complicated, but let's just make it simple by saying you would collect 12 cents and lock in a loss on the entire trade of 22 cents. That's less than 34 cents or the 26 cents, so that might be ideal for some of you. With 1 week left until expiration, I'm happy to let this trade ride a bit longer and see what happens later in the week. The beauty of the spread trade is that the loss is known up front. That's why I prefer trading credit spreads and debit spreads, especially when you are starting out trading. I won't lose any sleep over this trade at all. Still, I'm willing to wait a week before locking in a loss. But the beauty of it is the loss was known right from the start. So you're not risking the house. You're never taking on more risk than you understand. And one of the keys to option trading is trading risk that you understand. That's important always. All right, so our final trade from last week is going to be the debit spread on Quantumscape Corporation, symbol Q as in Quebec, S as in Sierra. At the time, the stock was trading for $16.61 per share. I looked at buying the November 16 half call spread for 32 cents. That could give us a maximum gain of 18 cents, or that's a 56.25% return in 2 weeks. Well, shares of Quantumscape lost $3.16, ending the week at $13.45 per share. The in-the-money call spread that we bought is now far out of the money. Similar to the credit spread, the stock has moved so far that many of the normal adjustments that we would make on this trade are not very appealing. I'll watch these trades closely over the next few days to see if there's a way to minimize the risk, even if that means locking in a small loss. Always just make sure you do the math. Do the math fully before making an adjustment. Expiration is a few days away for these trades, so the pain won't last too much longer. And it is painful to lose money, but I prefer trading spreads because the amount of money that I'm going to lose is known right up front. Now, we are 1 week away from expiration for the November monthly options. All new trades on today's show will use the December 19th expiration date for monthly options in December. Let's get into the new trades for this upcoming week. We're going to start off with a covered call on Opendoor Technologies, symbol O as in Oscar, P as in Papa, E as in Echo, N as in November. The stock ended the week at $8.11 per share. I'm looking at buying stock and selling the December 9 call at $1.01, hoping for a return of 23.43% in 5 weeks. Now you enter this trade by buying stock for $8.11 per share and selling the December 9 call at $1.01. This trade makes the most money if stock prices finish above $9 per share. The break-even price is $7.10 per share. In real terms, the stock purchase will require $811 and you'll collect $101 for selling the option. Next up, we have our cash secured put. Looking at Anavex Life Sciences Corporation, symbol A as in Alpha, V as in Victor, X as in X-ray, L as in Lima. The stock ended the week at $3.64 per share. I'm looking at selling the December 3 put at 55 cents, hoping for a return of 18.33% in 5 weeks. Now you enter this trade by selling the December 3 put at 55 cents. This trade makes the most money if stock prices finish above $3 per share. The break-even price is $2.45 per share. In real terms, you'll collect $55 for selling the put, and you'll have $300 locked up in case you need to purchase the stock. Next, we have a credit spread on Rocket Companies, symbol R as in Romeo, K as in Kilo, T as in Tango. The stock ended the week at $17.05 per share. I'm looking at selling the December 16 put spread at 40 cents. That could give us a maximum possible loss of 60 cents per spread. Now you enter this trade by selling the December 17 put at $1.15 and concurrently buying the December 16 put for 75 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $17 per share. The break-even price is $16.60 per share, and in real terms, you'll receive $40 per spread that you sell and have $60 at risk. Our final trade on the week is going to be a debit spread on Freeport-McMoran, symbol F as in Foxtrot, C as in Charlie, X as in X-ray. Stock ended the week at $40.17 per share. I'm looking at buying the December 39.40 call spread for 65 cents. That could give me a maximum gain of 35 cents, or that's a 53.85% return in 5 weeks. Now you enter this trade by buying the December 39 call for $3.05 and concurrently selling the December 40 call at $2.40. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $40 per share. The break-even price on this trade is $39.65 per share. In real terms, you'll pay $65 to enter the spread, and your maximum gain is $35 per spread. That's it for this week's show. Thank you guys so much for listening and for sharing the podcast. I can always tell it's being shared. Also, I've been mentioning creating a community that will have a chat feature. It'll have access to all of the training videos and the additional ones I've been creating. That is being launched this week. Finally, I'm super excited. So what I'm going to do is share it via email if I have your email. If you would like to see more or get more information, just send me an email at eric@theweeklyoption.com, and I'll make sure that I include you in the information. It's going to be great. It's going to be affordable. It is also going to be very helpful because on a daily basis, we will get to discuss markets, talk about trades, and if you have questions on how any of these strategies work, including the cash secured put or even that call ratio spread I mentioned earlier, the videos will be right there to help explain them in clear, simple terms. So make sure I have your email address if you'd like to learn more about it. I hope you guys have a fantastic weekend, and as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.